Before we jump into today's real estate investing podcast episode, we have some exciting news to share. Applications are now open for the second round of our None-to-One group coaching program. The None-to-One group coaching program, led by David and myself, two pharmacists and real estate investors, is designed for individuals who are ready to take the real estate investing plunge, but need some help putting the final pieces together. We'll guide you through finding, financing, fixing, and filling your very first rental property through a mix of structured learning and real-world examples, all during live classes.
We're giving our podcast listeners an exclusive 20% discount on the None-to-One course. Enter coupon code podcast20 on your application to redeem the discount. Again, that's coupon code podcast20 on your application for 20% off the course. Get all the details and apply for the course by August 22nd by visiting yourfinancialpharmacist.com/none-to-one. We expect this round to fill up quickly. So again, that website is yourfinancialpharmacist.com/none-to-one. That's none, TOONE. Can't wait to see you in the course. All right, let's jump into the show.
Hey, David, how's it going?
Hey, good. Thanks. How you doing, man?
Good. It's we're winding down on summer now. I feel like it's still warm outside, but my kids are getting ready to go back to school. My 5-year-old, their first year of kindergarten. I'm freaking out a little bit, David, but it's been good.
Yeah, and I'm freaking out that the summer's over. It's been fun, like the neighborhood pool and all those things, like just that chance to breathe before the chaos of the fall kicks in. So, yeah.
And not just on the family side, right? That's where my head goes first. But we're here to talk real estate. So on the real estate side too, it's been pretty wild, right? The frenzy of early 2022 and all of 2021 is kind of fading. We see a big change in inventory. Again, putting that realtor hat on, a lot of my buyers have been sidelined by higher interest rates and low inventory because people are, afraid to sell or afraid to move to another place with a higher interest rate. It's been really interesting. It's totally changed the season of real estate for sure.
Yeah, we're definitely seeing that too, with more inventory and even price reductions, which I feel like during the pandemic there were never price reductions, right? Like it was, a year ago it was always like, no, they just chose to raise their price, have fun, right? So it is the real estate market is changing, no doubt.
But we're still looking for new properties, right? We're still on the hunt for the next one. Always an investor. Doesn't matter the market. We can still make it work. We just haven't decided on, should we be doing a long-term rental next? Should we do a short-term rental next? There's so many cool options out there, and we're just trying to find the right fit for our investment strategy and what we're trying to do from a income replacement side of things and so on.
Yeah, and I really think there's a lot of fun in that second home strategy too, where you can enjoy it, but then also rent it out to defray some of those expenses when you're talking vacation rental type thing. So even if it's not like by investment standards super stellar, it's still fun because you get to use it and enjoy it and create those memories with your kids. And so just super fun option there as well.
That's been fun for us looking at short-term rentals, especially is looking at ones that are accessible and close by to us so that we can picture ourselves in it too, and it truly becomes a second home and an investment. Yeah, I think that's awesome. It'll be a fun fit. But what about you, David? I know you've had some success in finding some deals recently.
Yeah, it's as inventory has shifted, we're starting to see more options in the market, which is definitely refreshing on the buying side versus how it's been trying to buy properties before that. Yeah,
particularly when it comes to cash flow or finding a discounted property due to needing some work. Those options just seem to be pretty rare.
Yeah, I mean, I'm definitely a believer that not all houses are good investments, but the right house can be a really great investment. So I've been trying to be patient and wait for something really good, in part because I'm like a lot of other pharmacists. I don't like taking big risks and swinging at something I shouldn't swing at. So it's been waiting to find a property that feels conservative, feels solid. And so those solid properties just are few and far between right now. But again, improving a little.
Yeah, that's been the problem for us, is that the low inventory levels are just making it tough. There's a ton of competition for the little that is good and that's out there. And so that supply and demand it's causing prices to stay high or to increase in some cases. So again, we've seen through escalation clauses, appraisal gaps, all the things we talked about on past episodes, but it's not just on owner occupied housing; it's in the investment space now too. So
Yeah, and so in order to find properties, one of the things we've been doing, I know we've talked with guests that have said similar things, is you have to be looking for properties that don't have a lot of competition.
Mhm.
So I know a lot of other guests have been talking about buying properties off market. So you're looking for that buy owner house, or maybe sending letters to people saying, would you be interested in selling your house, those kind of things. One of the things that we've done to try to find properties that are in less demand is to find properties that are tenanted, rental properties that already have tenants in them.
Yeah, like you mentioned, past guests. I mean, Dylan just 2 episodes ago on episode 68 talked about going out and doing mass marketing to houses that aren't even on the market yet to try to solve that inventory problem.
Yeah, and that's certainly one strategy that works, but that's also a lot of work to put
Right.
together mailers, send all that out, right? And so that's not something that I've had time or interest in doing lately. So, but going out and finding properties that are tenanted, that's something that can work. And we thought this would be a good time to do a deep dive into this strategy as well, because this one has come up very briefly on a prior podcast.
Mhm.
We've had this question come up too, as far as what kind of things do you look out for when you're talking about buying a tenanted property. And so again, this is one of those topics. Every few episodes we pause, we unpack a little more, and so we thought we'd do a deep dive into the complexity of buying tenanted rental properties and what that can mean as an investor.
And you and I have both done this, right? We're not just talking about this from a philosophical perspective. We have both done this, and done so. I don't know about me successfully, but you've done this successfully. I've done it with middling, with some pitfalls. But again, knowing what those things are before you dive in, that can help you make a better decision.
Yeah, and I know we try to be real here, so we should talk about some of the pitfalls that you've seen, and some of the issues, because yes, I know you'd shared some of the heartburn that you were given by that property. So yeah, let's do that. Let's talk about some of the good, the bad, and the ugly, but let's unpack this a little more. And I think in order to do that, I think there's four key questions
Okay.
that are probably good framework to unpack this with. So starting off with, what's the good and bad in general about buying tenanted properties? What strategies exist for finding deals with tenanted properties? What people can I ask for help with my due diligence? And what documents can I ask for to help with my due diligence?
I really like it. I think that's a good breakdown. So let's jump into the first one that you mentioned then. So why would someone want to buy or even consider buying a property that's tenanted versus a vacant rental property?
Yeah, I when I was first getting started, I thought like, well, a tenanted property seems like the dream, right? Like if I don't have to do any work to the property, I can just buy it. There's a tenant in it. There's a lease in place. Someone's already done all the work to get it rent ready, to find that tenant, to put that tenant in that property. Like it's done. Like that seems perfect, right? So I think we've both seen though, and as you've hinted at, it's not always that awesome, or it's not always that turnkey, or not always free from repairs in some cases.
But you do make a good point, right? In some cases, that if the tenant's there, they've been there a while, they're paying rent, the rent's on time, there's minimal maintenance. If the previous owner actually took care of the property, it can be a really good fit, right? It's very low entry, low workload on that entry point, which is super important. But again, a lot of times what we see is that the prior owner didn't take care of the property, or they ran out of money, and there's some repairs and some maintenance that haven't been upkept, or the tenant's not paying, or they're paying a lot less than market rent and they're locked into a year-long lease, right? Those are all the things that we run into that lead people to even sell in those situations, and so that can create some problem.
Yeah, and for better or worse, I've bought in both the good and the bad of that as well, right? And so, if going into the property is turnkey and ready to go, that could be great if that's what you're looking for. I know one of the things that we talk about as well is oftentimes you're paying a premium for that. You're putting the full 25% down. There may not be a lot of built-in equity there, and so that can be a tougher property if you're trying to scale your investing. So in some cases, it can be advantageous to buy a property where there are problems, and build that into your business plan, is build that into your strategy, and solve those problems.
And so, what are some of those problems that you take on, right? So if you see a situation where you can jump in and help, like what's one of the key problems that a landlord might be dealing with that you can jump in and help with?
Yeah, I think that can bring us to our second question right
Mm.
there, is terms of using that, solving those problems to find deals. And I think we could talk about a lot of different things. We can talk about, where the tenant isn't paying rent, or maybe where there's major maintenance issues. And so, that's where I know it sounds kind of paradoxical, but buying a property where the tenant isn't paying rent, or buying a property where there's a leaky roof, like that can actually be a strategy as well.
Yeah, I hear you, right? So most buyers want simple, right? Especially
Mhm.
pharmacist investors, very busy. We don't want to come in and have to paint everything or remodel everything. You have to solve a lot of problems. And again, whether that's owner occupied or investor, that might be the case. But many people can get overwhelmed by that long list of projects, and that goes for sellers too, right? That we're not the only people out there, right? So if you're on the other side, you've got a property already, and that long list of problems starts creeping up, that might be a time where you are ready to get rid of that property and someone else can come in and buy that.
Yeah, and I think it can be tough sometimes to jump into that super problem property, right? Like I personally had to get desensitized to that over time, right? Like I had to buy a property that needed just a little bit of work, and then a little bit more work, and then a little bit more work. And by the time I was comfortable with a $20,000 or $30,000 house rehab, and just growing, but what I found is as the repair bill gets higher, there tend to be fewer people competing for that house, and then when fewer people compete, not only is it easier to get that property, but then there's a better chance that you can find a deal out there as well.
Yeah, absolutely. I see properties all the time in my local market where I know for a fact it's going to be 80 or $100,000 rehab on what's going to be a $200,000 home, and that's just not something that everybody wants to take on, right? You don't want to be able to sink half your cash into the equity of a property and have to run with that. So it's just there are deals out there where that level of work is required, but there's also properties that don't need that much work, right?
Yeah, there's all kinds of flavors out there, right? Like there's properties that don't need very much work, and that can be a strategy. Some properties need a tremendous amount of work, like that $100,000 rehab that you mentioned, and sometimes those aren't even a deal when you get done with it. Like if you need to pay $150,000 and then put $100,000 into it for it to be worth 200 at the end, like that doesn't make
Right.
sense. So there are situations where just because it needs work doesn't mean that it's a deal, or doesn't mean that it's a good buy. And so when, pharmacists, we are very comfortable in spreadsheets and all those things. So that's where working through that math problem is a really good thing to figure out if there's some margin left in there based on what you're able to buy it for and fix it up for.
And so I know you prepped a little bit for this, right? So there's some background numbers. Can you walk us through like an example of what that looks like for our audience?
Yeah, so a simpler rehab that we bought recently was a house a few months back. We paid about $65,000 for it, just if we're using round numbers. It was a 3-bedroom house with a tenant paying $800 a month. So again, I'm not a realtor. I can't, do all the market analysis kind of things that a realtor does. But from a very rudimentary standpoint, there's a house across the street that just sold for $95,000. The neighbor's house just sold for 100 and something $1,000. And so if this house was $65,000, I'm assuming that there's some value built in there, particularly because this house was being rented for 800. And when I talked with my property manager, they said it really should be like 11 or 1200. And really, the only work that this house needed was that it had a bad roof, and that roof needed to be addressed. And so, a small bit of interior maintenance that needed to be fixed too, but really about $10,000 was going to fix this house up to where it needed to be. And so, if $65,000 purchase price plus $10,000 on the roof and some interior fixes gets it to the point of this, 90 something, 100 something $1,000 house, then there's some equity created there in the process.
So that's a quick summary. And I think it's important to step back for a second though, especially if you're a newer investor and right, you hear all those details and you think, well, how did David figure that out? Right? Like where did he get $10,000 for a roof? Like, did you just know that? Did you hire a contractor? Like, where do you capture all the data so that you can do that math and start to feel comfortable?
Yeah, I think that's a great question, especially for the pharmacist that loves the spreadsheet, right?
Right.
You need to figure out what's the correct data to plug into your math, right? So for rent rate, I know that a lot of people will look at Zillow often offers a rent estimate, or there's rentometer.com where you can go and you can get a rent estimate. And those can help kind of ballpark you. And I'll often use resources like that. Another thing you can do is you can look at rent listings from different websites that are out there on actual listings or the property manager websites. That's one thing. And then for me, I was able to then get a text message to my property manager to figure out exactly what that would be. And so I try not to bug my property manager for every single property that I look at. But if I'm getting really serious, working on writing that offer, and I want to know for sure, like, can we really get $1,100 a month for this property? Then I do like to check in with the property manager as well to verify that one for the rent estimate.
Yeah, and the income side can be huge, right? Because you can't cut expenses to make your income go up, right? So you can always try to spend less, but you can't make more. So that getting that rent number right is super important. But what about the repair side? What about figuring out how that all the costs are going to add up?
Yeah, many investors I know will have a home inspector walk through the house. And so then you get a formal home inspection report, and you can send portions of that home inspection report to a contractor to get a ballpark estimate. Some home inspectors may give you a ballpark as well. Some realtors may be able to help you with that. And even just as you're checking out the property, some sellers are very transparent where they say, this house, roof as is, or like they hint at the roof isn't there, or you can just flip through the pictures and you're like, that shouldn't do that. Like you can just kind of see issues, right? And so then a investor friendly real estate agent can also tend to help with those kind of estimates as well. And so those kind of strategies can help to get that, because it's not often practical to have like, okay, now I'm going to call a roofer and I'm going to pay for a bid and I'm going to, see how much that is. And then I'm going to have an electrician come out and look at that. Like a lot of times it's just not practical with the pace that you need to make offers in this market. So, but by ballparking those kind of things, we knew that in this case, it was going to be about $10,000 to fix up the house.
Gotcha. So if we go back to your original numbers, right? You bought it at 65, you're putting in 10, you're all in at 75,000, but you're talking about comps that are in the 95, $100,000 range. So was it the tenant and the low rent that was keeping the price low, or like why wasn't everybody else snapping up this deal? Because it sounds like it's a no-brainer.
Yeah, well, I'm guessing there's a few things that come into play here, right? Like if you are an owner occupant looking for a house, you probably aren't going to want to buy a rental
Sure.
property where someone has 6 or more months left on their lease, and then that tenant has to move out, and then you have to fix it up, and then you have to move in. So, that a property like that is most likely going to be bought by an investor, and an investor may not be super excited about a property where it should be renting at 1,100 or 1,200 a month, and it's only renting for 800 a month. Those long term leases far below market rate could scare off some investors as well. So at least in my area, the lease carries with the property and is not voided by the sale. So the buyer assumes the tenant, they assume the lease, they assume that rent rate, for better or for worse. And so knowing that going in, those things can discourage a lot of people from skipping over that property.
That's super important. I've seen newbie investors mess that up where they will send a new lease the day they acquire a property as if that previous lease expires. And in most municipalities, in most markets, that previous lease is still in place, even if you are the new owner, and you can't override that previous rent payment. So again, really important caveat there. Make sure you check your local laws, but in almost all cases, whatever that lease was before, that's in place until that lease expires. So again, if I'm looking at this as an outsider, David, like why were you buying this when everybody else thought doesn't make a lot of sense?
Yeah, and I think for me, and this is where we go to, every real estate investor has their own goals,
Mm-hmm.
right? And so my goals are very long range. So I'm not quite as concerned about today's cash flow as I am with it being a really solid property for years to come. And so at 800 a month, I knew that was kind of cash flow neutral. It really wasn't going to create any monthly cash flow, particularly at today's interest rates. But I knew eventually, like, the tenant will move out, because hardly anyone stays in the same home for too many years, right? And so eventually, when the tenant moves out, we can go in, we can clean it up a little more, and then we could rent it out higher, and there would be $300 or $400 a month in cash flow. So at some point, again, it's not like I have to pay it every month, like it's still at least neutral, and eventually that will create cash flow. So in the meantime, I'm able to get a property at a pretty significant discount. So in this case, like, let's just assume round numbers, it's $75,000 all in, and the value is $100,000 for round numbers. That built-in equity then is $25,000 of created value. Where I bought the house for 65, I made $10,000 of repairs. I'm at 75 and it's worth 100. There's $25,000 of built-in equity. And for a safety-oriented pharmacist, right, that creates some cushion in this market. So if prices drop by 10% or 20% even, and the house is suddenly worth 80 grand, I've paid 75 grand for an $80,000 house, and I'm not underwater at that point. So that's kind of heartburn relieving for me in this market. Plus, then I know it's a pretty solid house and it's got a new roof. So we took a property, even just kind of from the human angle, we took a property with a leaky roof that had a tenant in it. Now the tenant has a dry place to live, right? That has a new roof. And so that feels good as well, that we're able to improve a property for a tenant. So all that came together and it felt like a good investment given our kind of long range goals of acquiring solid rental properties.
I love that. I think that's a great example of what that longer vision can achieve. I think so many people are focused on, well, what's the cash flow tomorrow? Because if that's not $500 a door, I'm not buying it. But that might not be where everybody wants to be right now, right? So I think that's a really good step back of, here's what my goals are, and here are properties that are going to help achieve that. And especially if your goals are different than what everybody else is doing, or at least different enough that you can then be competitive on some of these properties where others cannot, right? Most investors are going to look at that and say, it doesn't cash flow today, I'm not going to buy it. But you look at it as, there's $25,000 in equity sitting out there. I'm absolutely going to go snap that up. It will cash flow next year or the year after that, and I'll worry about it then. I think that's really cool.
Yeah, and we shouldn't skip over too that you can buy a property that is already tenanted at full market rent, and you don't have to deal with these headaches. Because I know we start talking about like roof replacements and leases way, like I know some people are getting skittish there and a little concerned. So I did buy a property like that a few years ago, and although I had to save up that down payment, and that can take a while, it was super nice to buy a property that only needed like a few minor fixes, and that was really set to go for several years.
Yeah, I had one like that as well, and it was so nice to buy it, spend a couple of weekends and a couple of $100 getting it rent ready, and then you're off and running. Those are harder to find for sure, but those can be really nice wins when you do find one. So, any other strategies or things like that to consider when buying with a tenanted someone in place?
Yeah, so I'm hesitant to bring this one up because I know like it's going to be immediate pain for you with the project you had recently, but there are some instances where buying a property where there's a tenant that's not paying rent and there's an eviction in process, that can be another thing, right?
Yeah, you just wanted to bring that up, right? This is a good one of how to do it wrong all the way across the board.
No. But in all seriousness, evictions are not fun, right? For anybody involved, they can be gut wrenching and heartbreaking and really problematic. And particularly if the tenant is, damaging the property in the way out, it's just one of those nightmare scenarios. Like, yeah, evictions are just not fun.
Yeah, it's an unfortunate part of the industry that we're in, or the world that we're trying to invest in. If you do this long enough, it's simply bound to happen at some point, right? You're going to have an eviction. It's just like pharmacy, right? Like, medication errors, they're awful, but they're going to happen. The goal is to mitigate them and make them as least damaging as you possibly can, right? So be prepared for it. Know that it's going to happen eventually, but put things in place to help mitigate the damages from when it does occur, because that's ultimately the goal.
Yeah, and at least when it comes to evictions, there are clear processes that should be followed, and you can let those play out. And there's attorneys and professional property managers that can help along the way as well.
Yeah, and I'll be honest, right? With my recent one, it most of it was handled by my property manager, right? I signed a couple of documents and they did the rest of the work for me. So it sounds like this big bad scary thing on the back end, but truthfully, the property manager, if you get a good one, they're going to handle that stuff for you and handle it the right way, so that it's being done legally, being done appropriately. And again, we were even able to get this evicted tenant into a better property for them, one that fit them a lot better, that they could actually take care of, where this previous property they were just simply not able to. So So again, we're talking about a lot of doom and gloom, David, but how do we use this as a strategy?
Yeah, I think buying a house in middle of an eviction process really sounds terrible. So it's
Don't
it's
do it.
going to remove a lot of people from the equation, right?
Right.
Like they hear some of these horror stories, and so then when demand drops, that may mean that the price drops, and then there's potential to get a deal on the property in exchange for that work that's done in solving the problem.
Yeah, that's exactly what we did, right? We stepped in and we solved a problem. It took us longer than we wanted to, and I really created a huge problem for myself. But that's it, right? We got a deal because we created an opportunity for somebody else, right? We solved a problem they were having by stepping in at the right time. So rather than going through my doom and gloom example, do you have one that you can share that talks through what this might look like in mid eviction?
Yeah, I think that just as you've shared with your realtor hat on, you can write offers in so many different ways, and
Hmm.
and so one of the situations that we were in recently is we bought a property that had a tenant in it, and that tenant was just not cooperative with the prior landlord, not cooperative with the city inspectors, not cooperative with anyone, like would not let anyone into the property for any reason. And so that just made it impossible to sell because who wants to buy a property
Sure.
that you cannot get inside of? The tenant just chased people away. And so we just made a super low ball offer, and that gave us a ton of room to make repairs. So we just thought like, well, what if the tenant just ruined all of these things and we had to do a major renovation on this property? What number would still make sense? We made that offer and it was accepted. And we put a caveat in that offer saying that we would not buy the property until after the eviction was complete.
Mm,
So the prior owner had to still follow through with that work and get that done. And really the pain on the prior owner's part, like they were set on that eviction. They were doing that whether we were buying it or not. That was already in process. But that owner didn't want to go in and do the rehab that was
sure.
going to be necessary after the tenant was out. So the problem that we were able to solve is we were able to go in and make sure that the property got cleaned up properly, rehabbed correctly, and that made it simple. So once the tenant was out, we had in the purchase agreement that we would get a short pass fail window to go in and make sure it wasn't like completely scary trashed, but just like a little scary trashed, I guess, if that makes sense. So we went in and did, flooring, paint, a kitchen, those kind of repairs. But overall, we were pleasantly surprised it wasn't in that bad of shape. Um, and even just by, having a fresh reset button, that tenant was able to move somewhere else, and we were able to not only get it to the point of being safe and respectable, but also able to uh, hit a higher rent rate than the prior owner was able to hit, several years ago.
I love that. I think what's important there is that you basically jumped into a messy situation, right? You took something that a lot of people looked at and they just thought, "Oh, that's messy. I'm not going to deal with it. There's other deals out there. I'll find something else." And you said, "Well, there's actually a good bit of equity to be had here. I'll dig into the mess if I can come out unscathed on the other side, or at least relatively unscathed." And I think that's where you found that value. I think that's really cool.
Yeah, and that's where, I think the built-in equity, again, going back to that, like that's what we were after. We wanted that safety where in exchange for solving that problem, where the prior owner was able to just sell it as is, like trash shape, junk everywhere, like they were able to sell that, and then we were able to solve that problem and create some equity. And then even the increased rent was really more just a function of time than anything, just that the prior owner hadn't been increasing that. And so when we put a for rent sign in the yard, the market rent was what the market rent was. And we were able to turn that into a solid investment again in a respectable place for someone to live.
Yeah, I love that. All right, well then I want to jump in because we've alluded to this a little bit, but I think it's important to really explain it because it sounds overwhelming, right? We're talking about evictions and you're handling an eviction, the previous owner's handling an eviction. I've got one that I'm dealing with, right? But who can help with all of this process? So where does someone go if they're an investor for help with this stuff?
Yeah, and I think that's one thing that we continue to harp on this podcast is that as a pharmacist that's working full time trying to invest, like you don't need to do this all yourself. You can surround yourself with a team, just like how healthcare is practiced as a team sport. Real estate investing can be a team sport as well. And so a professional property manager can be a fantastic resource in all of this, whether that's confirming rent numbers or helping with the eviction process nuance that you may not know offhand, or even just other ways to vet a property to see if it's a solid investment or not. That professional property manager can be a huge team player for you.
And then obviously, if your property manager doesn't have the construction crew or the contractors to do the work themselves, you'll also need a really good contractor, or at the very least a home inspector, somebody that can walk through with a professional eye and look at some of those things and help you ballpark the costs. And again, if you're struggling with where to go with that, definitely recommend talking to your investor friendly real estate agent. They should have a Rolodex of people they can turn you to of, yeah, this is the roofing guy you want to talk to, and here's the guy that works with the city a lot. And so if you got to get permits, here's your individual. Like, they should have those people, so you don't have to worry about that whole process. That's a really important piece for your realtor to bring to you.
Yeah, and that's the step that's really the same as buying any investment
Yeah.
property, right?
Mhm.
Like you need to be able to have those people. They can help to confirm that that value is there, that the rate makes sense, the property's in good shape, that the repairs won't break the budget, like that all those pieces come together.
All right. So we've got kind of the setup. We've got people that can help. But what about the actual process? What are the things that if I'm a new investor and I'm thinking about doing this, David, right? I want to find a tenanted property. Maybe it's got some problems. I want to dig into the mess a little bit. Are there some important things to look for in terms of either documents or conversations to have? Like, what are some of those things that we should be looking for to help with that?
Yeah, and I think for buying a tenanted investment property, this may seem like a no-brainer, but one of the first places to start is to ask for a copy of the lease because believe it or not, there's not always a written down lease that exists with a tenanted rental property.
I was blown away by this when I first found this out. Like, the first property I bought with no written lease, I didn't believe it, right? And again, this is my own naivete. The When I was in real estate school, like, they talked all about how you have to have a written lease in place. And again, in Ohio, like, in order for it to be a valid real estate contract, you have to have a written document. You can't transfer a property without it. And it just seemed crazy to me that somebody was renting out a house to somebody else with no written lease in place at all.
Yeah, and believe it or not, particularly a mom and pop that's just trying to do this themselves, they may just have that verbal lease where they know the tenant and just pay me $500 and it's all good. And so
Standard.
that verbal lease, that not having a written lease, that right there can certainly scare away buyers and can reduce competition when making offers. So I think buying a property without a written lease can be scary unless you have property manager or other folks to hold your hand, or if you've done that before.
Yeah, and one of the things you can do that again, I learned the hard way and recommend to all my clients, if there's no written lease in place that they can share with you, or if some of the details of that lease are not very clear, for example, like security deposit is sometimes something that somebody leaves off the lease agreement for whatever reason, but then the seller promises that it's X amount of dollars, right? Anything like that where there's ambiguity or it might be unclear, definitely recommend getting an Estoppel agreement. So an Estoppel agreement is basically uh, a piece of paper, a document that both parties sign, the seller and the tenant, that shows this is what we believe to be in place, right? Here are the terms of the lease. Here are the terms of the security deposit. Here's the when the lease expires. Here's when I signed it. Something that basically verifies all the information that you are buying the property under the guise of, so that everybody can feel confident moving forward that this is actually the agreed upon terms and that there's not going to be any surprises once that property closes. So if you're ever in a situation where you've got that verbal lease or there are pieces that are unclear, definitely work with your agent to get an estoppel agreement put in place.
Yeah, so we've got the written lease itself, the estoppel agreement, and then another document would be a rent roll or a trailing 12.
Mhm.
Like you may hear this by different names in different regions, but essentially you're looking for a document that describes how much rent was paid and on what date so that you can see, is the tenant paying the rent in full? Are they paying it on time? And what's that track record looked like for the past X amount of time? In some cases, that seller may even provide tax returns that may verify this too, so that certainly, I'm sure people out there rely on their taxes, but hopefully they don't. And so hopefully if they've put it in their taxes, it's verifiable. And so some people may demonstrate it that way as well. And that can be more helpful than you may see people that will put together what's called a pro forma, or just the, like, theoretically, if the tenant paid every month 100% on time, 100% rent in full, this is what the property would look like, versus more of an actual of, in the last 12 months, this tenant only paid 4 times. They didn't pay 8 times. They're very far behind. They owe a lot. The security deposit's small, like all these kind of things, like figuring out what those actual details are on the finances as well.
And I recommend, again, agent hat for a second. I recommend asking for those documents, the lease, the Estoppel Agreement, the rent roll. All that should be part of your contract, right? It's a term of your agreement that you get to review those things. That way, it's in writing somewhere. Are there anything else that I'm missing, David, or things that would also be helpful in this process?
Yeah, I think one other thing that we found to be helpful is, depending on the local jurisdiction, there may be a rental certificate or other kind of inspection by the city that allows the property to be rented, or that's required at the time of sale. And especially because that rental certification may not transfer with the purchase, you may have to have the property re-inspected upon purchase. And so, but having a copy of that existing certificate, or if appropriate, if there's some kind of list of repairs, that might be really helpful. We've bought properties before that have come up for renewal, and the city will go through and they will come up with a very precise list of, these are the things you need to do in order for us to grant this property a rental certificate. And so that just becomes this, like, again, pharmacists love checklists, right? Like, if I know there are these 7 things that I got to go through to do, like, I can figure out what each of those 7 costs. I can total it up. I can figure out what contractors, like, it just becomes very, very straightforward. And so if that list exists, and really the last couple of properties that we bought had those lists in place, so it just made it a really simple decision for buying it, and price and offer and all those kind of things, because we knew exactly what had to be done to that property to make it safe and respectable.
Love it. So, David, how are you using these strategies in today's markets? Are you actively doing this today?
Yeah, so I think as we started to say earlier in the episode, you and I are both working on this strategy right now, right?
Right.
So we've bought a couple properties just in the last month or so that have been tenanted properties that have been below market rent, and had that list of repairs in hand that was really only moderate, right? And that's helpful as well. So with that very precise list, now we can go in and we can make those repairs, and because they were tenanted, there were fewer buyers and less competition, and so that was helpful as well. So although they may not cash flow today, our strategy, like I mentioned, is that we don't need them to cash flow right away. We're more concerned about discounts in this market. So we're still buying, we're still doing some of those basic fixes, and then planning that at some point that tenant will likely move out, whether it's next week, next year, 5 years from now, whatever that would be. And then at some point, we'll be able to re-rent, clean it up, and rent it out at whatever the market rent would be at that time. So that's what we're doing. How about you?
Yeah, I think maybe I'm just still a little burned from the last one, but we're doing a little bit less of this right now. I really want to make sure that we've gotten either a vacant property that we can fix up, right? I really like the rehab side of it. That's where I feel a lot more confident. The people can be tough, right? It's a crappy situation to be in. Either dealing with an eviction or dealing with an unpaying tenant. It's just, jumping into a headache. So I agree there's deals and opportunities out there, but for right now, for our purposes, it's not a fit at the moment, but we have done it in the past. It makes sense in certain situations. And I'm not saying I wouldn't do it, but it's just not an active target for us at the moment.
Yeah, I think that hopefully we've pointed out some pros and cons here, and even kind of that gradient of what may make this
Right.
easier or harder to deal with, right? Because there's the properties where you're in active eviction and that feels really painful. And there's the properties that are rented just a little bit below market. And that tends to be more the end of the spectrum where we're hanging out. Because I agree, those evictions are not a lot of fun for anyone. So it makes good sense to avoid those points of pain, particularly if in your market you're able to find a vacant property and that fits your goals and your strategy.
Well, we would love to share more with you guys about this strategy. If you know someone out there, or you yourself are doing things like this, buying tenanted properties, or have dealt with one in the past, We'd love to hear from you guys. So head on over to the YFP Real Estate Investing Facebook group. If you're not a member, make sure you become a member. Drop us a note. You can head on over to yfprealestate.com. Great way to connect with David and myself. Just again, join the community of pharmacists and investors that are talking about this stuff, because we'd love to hear from you guys. So join there, connect with us. And again, hopefully this gives you guys some idea of ways to use a crazy market here at the end of the summer to still find opportunities to buy. And again, if it fits and if it makes sense in your market.
Yeah. And again, I agree completely. I think sharing these stories can be really inspirational. So please do jump on the YFP Real Estate Investing Facebook group if you're able to do this, or if you're even considering a deal and wanting to make sure that you're dotting all your I's and crossing all your T's with your offer and your due diligence. Great place to ask for advice as well with pharmacists that have done this and several other real estate investing strategies.
Awesome. Well, hopefully it helps you guys out, and have a great rest of the week.
Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard on today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with Nate or David, head on over to yfprealestate.com and join the growing YFP Real Estate Investing Facebook group. As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content in this podcast is provided to you for your informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on this podcast. Opinions and analyses expressed herein are solely those of your financial pharmacist, unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.